Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the first scenario where we are looking for upside, which is this unfinished zigzag, a 5-wave impulsive structure in A, 3-wave structure in B, and now looking for a 5-wave impulsive structure to finish a wave C. The most common target for wave C is between the 1 and the 1.236 trend-based fib extension taken from the start to the end of A to the end of wave B, giving you a target between 65.6k and 67.5k. Inside this wave C, we then want to count an impulsive structure, having a wave 1, 2, we're looking for a wave 3 to eventually finish to get us a wave 4 and then a wave 5 towards the upside. Now at the moment, the target for your wave 4 here between the 0.5 and the 236 is taken from the end of wave 2 to the current high that we have on the chart. If price is going to continue to the upside, the target area for your wave 4 will also move towards the upside as you then pull the fibs from the low to wherever the high is going to be made before you then start a bigger range, which is what we're looking for in this wave 4. Most commonly, a wave 4 is longer in time than a wave 2. Now currently the common target for your wave 4 is between 62.8k and 61.5k. Also good to know that we are currently hitting resistance, the blue box on the chart, more specifically the daily naked point of control inside the blue box 63.8k. But if I open all of the levels, you can see we have some more levels to the upside as well. However, my main next area of interest after pretty much 64.3k is the resistance that we have over here at 66.4k, which includes a daily naked point of control and also a monthly naked point of control. Now the invalidation for this scenario is the high of your wave 1 at 61.373, and that is because a wave 1 and a wave 4 are not allowed to overlap in an impulse, which is what we are looking for over here. Now finally, you also see two vertical lines on the chart. These are fib times that I took from the start of A to the end of A to the end of wave B, comparing wave A in time with wave C in time, and it is common for a wave C to end between the 0.618 and the 1.618 fib time, which is between Saturday 2 a.m. the 21st of this month and then the 28th of this month, also 2 a.m. on Saturday. The most bullish scenario on the chart is a multi 1-2 where we have a finished 1-2 in green, 1-2 in blue, and look for impulsive continuation to the upside. Generally, the minimum target for wave 3 in green is the 1.618 at 70.6k, taken from the start to the end of 1 to the end of wave 2 with the trend-based fib extension tool. Now, preferably, we're going to move in a wave 3 to the upside on increased volume before the weekend. And the reason is that if you do not move up before the weekend hits, then the probabilities for this scenario go down. And the reason for that is time, as well as actually price, but mainly time, because currently here we have a move towards the upside. Now, if we would make this move a lower degree, wave 1, and then look for another wave 2 during the weekend, right? And then look for that wave 3 to the upside after the weekend, then your wave 1 is now already longer in price than your blue wave 1. Now, mind you, this has to do with Elliott wave degrees. Your highest degree is green, 1, 2, 3, 4, 5. Inside the green wave 3, we have the blue one, 1, 2, 3, 4, 5. So that's a lower degree Elliott wave count. And then the white one, 1, 2, 3, 4, 5, would be a sub-degree of the blue wave 3. Now, preferably in a multi 1-2, your next wave 1 and 2 of a lower degree is a little bit shorter in time and price. However, you can see that price has already passed this blue 1-to-1 on the chart, taken from the start to the end of the blue 1 to the end of the blue 2, meaning this move is already longer in price than your blue wave 1, which ever so slightly impacts the probabilities negatively. But it's not an invalidation, it's just a probabilities game. But if you then would end your wave 1 over here tomorrow, for example, or maybe we already start a wave 2, who knows? But because we know that during a weekend the probabilities are highest to move sideways, going sideways for 2 days in a white wave 2 means that the white wave 2 is also going to be longer in time than your blue wave 2, which again lowers the probabilities for this scenario. So what we want to see is price to pass resistance, move to the upside on increased volume. You can see that volume, it's not been too bad, it's been slightly moving to the upside, but it's mainly like small little peaks. It's not like a couple of candles after one another with a high amount of volume or very quickly increasing amount of volume, right? You can also see over here, we hit resistance now, but we're starting to slow down on volume as well and potentially form a bit of a range against resistance. We want to see continuation. That is what we want to see in this particular scenario. Now then we have here the base channel. We have now hit the upper trend line of this base channel, which is taken from the start to this low over here to this high. And that's important because in a zigzag, you are looking for an A, B, and then a wave C, where preferably your wave C is ending around the top trend line, the upper trend line of the channel. Right? It doesn't have to hit the channel exactly and stop exactly, end exactly at the upper trend line, but you do want to remain pretty close to the base channel preferably. While in an impulse, what you're looking for is price to escape the base channel, move significantly to the upside. Now finally, the most bearish scenario is a triple zigzag, a W, X, Y, X, Z. Has to be said, a triple zigzag W, X, Y, X, Z is incredibly rare, never preferred unless all of the other scenarios fail, which pretty much means the other two I've explained in this video. Now what you can see here is that price is channeling quite well, right? If you take a channel here, then you can see that it is quite nicely aligned, like price action is forming inside the channel so far. Your wave Y here is a little bit shorter than your wave W, which is no problem. The most common target for a wave Y in a triple zigzag is around that 1-to-1. Most common target for your wave Z is where we are right now, 63K to 64.4K, which pretty much includes the resistance where we are now. So in other words, in this scenario, you do not want to pass the resistance that we have at the moment. Now at the moment also price is of course moving to the upside and we do have some volume peaks. The general recommendation from an Elliott wave point of view is to wait for a range to form, because the next range will give us all the information that we need, and potentially here against resistance we might form a little bit of a range. If we then look at the CVD divergence, we still have this divergence over here. This is a 4-hour bullish CVD divergence with the target being 65K. At the beginning, it was not too relevant, but as price then on the 1-hour and local 4-hour time frame started to move to the upside with consistent bullish CVD divergences playing out, this one does become relevant. So it's interesting to keep an eye on price taking out that 65K top. If we then look at the lower time frame CVD divergences, then you can see we have a little bit of a bullish CVD divergence over here and also the bearish CVD divergence. Now I like to highlight that the CVD divergences with pivots on the left side here are not interesting to me. I'm only interested in brand new, fresh, bullish or bearish CVD divergences on the right side of the recent high. I want to wait for a range to form, give me some solid market structure, a solid sideways range, and then take it from there. At the moment, it's way too early. You can see we barely have any price action since price hit resistance, that daily naked point of control. And if we then look at the probabilities of the different scenarios, then on the number 1 spot, we currently have the ABC zigzag. To the upside on the number 2 spot, we have the impulse, and then on the final position we have the WXYXZ. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.